Welcome back, CTKS students and members. My goal is to assist you to be more of a financial blessing to yourself and those you love. Through trading and investing, let's assess market direction and market momentum. We're going to use the cheat sheet, which is available free from CTKSmethod.org. The reason that we look through the cheat sheet is that we're seeking to gain mastery over price action, and you can pick it up free from the homepage at CTKSmethod.org. There are 7 rows within the cheat sheet. Row 1 and row 2 give us an idea of risk on and risk off sentiment. Bitcoin and crypto, indeed the entire globe, follow the US stock market's gravity. So row 3 is incredibly important, which is triangulated by row 4. Row 5, row 6, and row 7 are all about the crypto market. Crypto is incredibly predictive of what the stock market can and will do. The reason it's so important to look at the cheat sheet is due to Rule 446. All markets and therefore charts are intercorrelated and interdependent. This means that one chart will impact another price chart. What does that mean? It simply means that all the different rows will impact what you're putting money into. So that's why it's very, very important to look at. Let's have a look into row 1. Row 1 is the VIX, the US 10-year yield, the US 2-year yield, the DXY, dollar yen, and oil. In as far as the charts are concerned, this blue line is Bitcoin. Now, looking at the VIX, the volatility of the S&P 500, you'll notice something very important. When the VIX comes down, what is the crypto market doing? And of course, the crypto market and the stock market are highly correlated at the current time. It's going up. One of the things that we want to just bear in mind, when the VIX comes down, we expect the stock market and especially the crypto market to rally. But when the VIX comes up, we expect, unfortunately, the exact opposite. We expect the crypto market and the stock market to fall. The US dollar currency index is typically a flight to safety. There's been so much risk-on behavior, especially inside the crypto market of late. The DXY has been coming down, and we typically triangulate the DXY and dollar yen together to see if they're moving together, and they are definitely doing so. We can see there's been negative price momentum inside the US 10-year yield and also inside the US 2-year yield. Now, what does this mean and what does it matter? The US 10-year is like your mortgage rate, the US 2-year like your savings bank interest rate. Now, what does it mean? If the mortgage rate is coming down, that incentivizes people to go out and buy property. If the savings rate is coming down, that actually incentivizes people to go out and buy property and also to divest their money from the banks and put it into the stock market and the crypto market. We've seen that US oil has been coming up recently. Since the US elections, signals have been very murky inside the market, but the VIX has stayed very, very true. Please keep your eye on the VIX at the current time. The VIX is very indicative of where the crypto market could go and also the stock market. When the VIX is spiking up, you can bet your bottom dollar that Bitcoin, crypto, and the stock market are coming down. So it's very important to know where to from here. And to answer that question, we need to look at structure. Structure will give us a markup across all of price history. In this case, the VIX hits more than 12,000 days of data. We can see the VIX hit structural overhead resistance at 1780, and it had a negative CTKS gap, which meant that it could fall very, very quickly. But that was preceded by a positive CTKS gap, which meant the exact opposite, that the VIX could spike up. These gaps are very important to know their location of, and we're smack bang inside a positive CTKS gap. The bears will seek to rally the VIX back up to 1780. So what happened yesterday inside the stock market and the crypto market, you could expect more of the same if the bears get their way. However, the bulls will seek to push the VIX down below that 16 level and below 1570. So if the bears get their way, expect prices to retrace. If the bulls get their way, expect prices to go up. Please let me know, what do you think the VIX will do? Do you think the VIX will spike up, or do you think the bulls will regain control over the markets? Row 2 is junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. When we look at junk bonds, it's kind of like the cousin to the VIX. Junk bonds and the VIX tend to move in opposite directions, so that's why they're part and parcel of us assessing what the market could be doing. When we look at Bitcoin just recently, it's retraced, but we know why, because the VIX spiked up. The VIX is primarily driving the markets inside crypto right now. We're getting a bit of a weakening inside junk bonds, but it is not significant. We're not seeing any cut unders here. By the look of it, we're actually seeing a cut over. This is looking really quite positive, but it doesn't mean that we can't come up and down. Look at what junk bonds did as it flattened out here to crypto and Bitcoin. Of course, the VIX was spiking then as well. One of the things that we'll do, we'll actually look at the structural levels on junk bonds as well. When we look at the euro dollar used to have incredible precision at saying, hey, I'm going up. Bitcoin and crypto and the stock market go up. And it did. But now we're seeing a bit of a divergence from that. The Forex pairs have become a little bit murky. So I just want to let you know that. In terms of gold, gold is coming up because the US 10 and the US 2 are coming down. Silver is pretty much flatlining at the current time. Please let me know, are you feeling fearful or are you feeling greedy in terms of the main market and crypto? Let's quickly have a look at the structural levels on junk bonds, and you can see at the 9670 level there was an area of structure that was hit inside the junk bonds market, and that level of structure has brought in all the sellers. They're currently failing, and Bitcoin is picking this up as well. For prices to go bullish, we need to see positive momentum towards the 9682. When we look downwards, if the bears gain control over junk bonds, they can certainly push it to 9650. Looking at gold from a structural perspective, we can see at the 2639 there is a level of structural overhead resistance, a very important level of structural support at 26. So if the bears get control and we see the yield starting to come up, we would expect gold to retrace at least to the 26 area. If the yields continue to decline, and that's probably going to be witnessed by dollar yen and the DXY declining and the euro dollar and the Aussie dollar coming up, we would expect that gold will hit this level of structural resistance at that 2640 and then make its way up to 2648. Please let me know, are you feeling fearful or bullish in consideration to gold? We're seeing potential positive action inside row 2. This is typically very good for the markets, and you can see that Bitcoin has been following that. But there is a potential for some degree of weakness, as we have been witnessing. By doing the cheat sheet, I actually help you to get to an institutional level of thinking. This is what the institutions do. They look very, very broadly, and they understand intercorrelation and interconnection. Inside row 3, which is the S&P 500, the Nasdaq Composite Index, the Dow, and the Russell. What we saw at the start of the trading session yesterday is a huge drop down followed by a shakeout rally. And we saw that across the S&P 500, across the Nasdaq, the Dow, and also the Russell. We're seeing a degree of positive momentum inside the stock market. Now, what does that mean? It means that there is a divergence right now between the main markets and Bitcoin. Potentially, the best way to think about it is like this. If the VIX is going up, that means the main markets are coming down. We're not seeing any indication of that right now. And the reason that we go through the cheat sheet is that we need to stack probabilities. You can't stack probabilities by just looking at one chart. Therefore, inside row 3, we have positive momentum, and Bitcoin is experiencing a little bit of a retracement. Now, the markets are not absolutely guaranteed to keep on going up because price just moves in a wave. It's always going up and down. But let's look at the structural levels on the S&P 500. A lot of people inside the crypto market say, Ken, I don't want to look at the S&P 500. That's the stock market. It's really boring. Well, it's not necessarily boring. It's a good market. But the issue is that as the S&P 500 comes up, what is Bitcoin doing? It's coming up. But look at this. If the S&P 500 is coming down, notice that Bitcoin tends to sniff it out and bottom first. We've seen this a lot. Now, what has the S&P 500 done? In the past trading session, it dropped like a brick. But where did it drop like a brick to? Well, it dropped like a brick to a structural support level. And if you were marking up your charts across the 55,800 plus days of the S&P 500, you already knew that that structural level at 58.69 was there and would capture price. So this is why it's so important to think structurally. What have we witnessed right now? The S&P 500 is moved from one structural level up to another structural level. And those structural levels are from 59.28 north to 59.36. This is where the sellers are going to inhabit the S&P 500. What is happening right now? Well, we've got a slight weakening of trend, but there's still a surge, which it means, well, basically what it means is the S&P 500 is doing its damnedest to get to 59.28 and above. But if it does so, it's likely to consolidate in here for a time. That's if the bulls get control. If the bears get control, you've got a negative CTKS gap all the way back to 58.69. Please let me know, are you feeling the fear or are you feeling the greed on the S&P 500? And you know it matters to crypto. Here, it's right in front of you. It's proved out in real time. One special pro tip that you can do is to look at Bitcoin overlaid with the S&P 500, the NASDAQ futures, the Russell futures, and the Dow futures. What are the futures telling us right now? There's small retracements occurring inside the S&P 500, the NASDAQ, the Dow, and also what's happening with the Russell? It's going for it. This is a really good signal. Typically, when the Russell falls, it falls pretty hard. And when it rallies really hard. We could see a decrease in fear coming up. So please put this one on your radar. And also, always know that no global market can escape the US stock market's gravity. If the US stock market is coming down, that will be reflected all around the world. But if it's rallying, the same thing will be reflected all around the world. This is a very important thing to understand. It can make you a huge amount of money. Looking into row 4, which is Apple, Tesla, Microsoft, and Nvidia. What are we seeing in terms of the pattern of Apple? It's quite positive for the main markets and also for crypto. Tesla is also positive, Microsoft positive, Nvidia positive. This actually points to any retracement being met by buying demand at the current time. But of course, we have to keep our eyes on structural levels. But this is a kind of a confirmation or a stacking of probabilities for row 3, the major market indices. And you can see how Microsoft just sold down in line with the major market indices and also Nvidia. But look at that rally. There's a lot of euphoria inside the market at this time. The reason that we need to look through so many different charts before we get to the crypto market is because crypto is influenced by those other charts. Inside row 5, crypto, total market cap, Bitcoin, Ethereum, and MicroStrategy. Or is that Michael's strategy? Now, what are we seeing in terms of total crypto market cap? Well, it obviously got a headache, and I would assume there's a structural level hiding in there inside the charts. But don't forget, crypto has broken out to all-time new highs. How could there be any structure around there? Because you are told, unfortunately, by retail influencers, the price discovery is afoot. No such thing. Sorry to break that bubble. Bitcoin, what we see here is a breakout of some sort. And a lot of people, when they do recent indicative price analysis and they don't mark up all of price history, will simply say, this is fantastic. We've broken above resistance. We're going to the moon. Hey, not quite so fast. Definitely, we have a lot of positive momentum inside the market. But as you saw, the market is primarily affected by the VIX, by junk bonds, and by the major stock market indices. So that's why we have to do all of those pesky rows before we get to the crypto market. One thing that we need to look at the structural levels on total crypto market cap and Bitcoin. And just by the way, are you feeling bullish or bearish, fearful or greedy? Please let me know in terms of the crypto market. I think it's important just to realize that the crypto market is in a bull run, even though it may not feel that way. We've certainly broken out to all-time new highs. This is not price discovery because there is resistance above. Price discovery says there's no resistance above. That's not correct. There is resistance above, and we need to find it. And that's why we use the CTKS method, because it reveals it. In fact, it's the only thing that does. In a bull run, please expect up to 20, 30, 40, even 50% retracements. Therefore, it is important where you buy. Looking at Bitcoin's chart, the one thing that we need to bear in mind, Bitcoin has not been around for a couple of weeks or a couple of days. Therefore, we must mark up all of price history. And you can do so most statistically significantly with Level 1 and Level 2 standard certification. This particular white line is the S&P 500. Now, what has the S&P 500 shown us? Well, it's pretty lazy for one thing. It doesn't trade 24 hours a day, 7 days a week. Oh my God, TradFi, traditional finance is so lazy. But that's why we love crypto. If you don't like the crypto market and you say, I'm going to sell everything at 2 o'clock in the morning, guess what? You can try doing that in the stock market. Okay, so what are we seeing here? We're seeing that the S&P 500 closes and Bitcoin keeps on trading. It keeps on a-ticking. And what have we seen as well? A bit of a retracement here. Now we need to look at the structural levels to understand what is cooking. And the real issue was this particular resistance level just south of 92,900. We did manage to get up and over it, but the sellers have been too significant. And look at what happened when the S&P 500 or when the main markets open. They pulled down Bitcoin crazily to a structural support level, and then it rebounded. And we have actually broken that 92,900 level. So long as we can get up there again, the bullish case is on. And when we stack probabilities, there's more stacking of probabilities to the upside than to the downside. But it doesn't mean the downside can't happen. We must always be aware and think in terms of 3 dimensions, because price moves in a wave. It's up and down and even consolidates. Pesky price. One of the things that you want to bear in mind, if we get a consolidation around that 92,600 level and we start to fail, there's a negative CTKS gap which could cause the price to fall really significantly and very quickly. If you know where these gaps are, you can take advantage of them and not be scared by them. But it means you must trust structure. But it means to trust structure, you need to know where it is. Let's talk about the bullish case scenario. If we get above that 93,000, and then we're going to have to clear that previous all-time high just there at around the 94 mark. So if we get up and across there, we're heading to the $96,000 area. It's not got a rocket strapped to it. The concept is that all price moves from structural level to structural level. If we get above this one and the correlation and interconnection between charts favors it across the market, we're moving to 96,000. If it goes the other way, it's because of the intercorrelation and interconnection between charts. Oh, and talking about that, If you would like to learn how to read CTKS structure, you can sign up absolutely free of charge, and this is worth US $700 if you meet the conditions. You can get the Profiting from CTKS Method structure course for absolutely nothing. Nada. Zilch. Zero. Just click the button on the homepage of CTKSmethod.org, and don't forget, just scroll down and grab the cheat sheet. It's also absolutely free. With this in mind, we're getting a pretty good idea of what's happening currently inside Bitcoin. But what is cooking with crypto? Total market cap, structural levels time. We've got a chart on total crypto market cap that is more than 3,700 days old. Oh, it's so old. And when we look at the price action, just note that it's always moving in a wave. That means that you need to be prepared for negative price action as well as positive price action, and also consolidation price action. Now, what do we see inside total crypto market cap? Well, we need to just pop on the indicator. All these indicators are available through the service. Literally, all of the rows of the cheat sheet, you can get the indicator absolutely included in your monthly service. Now, what's cooking inside crypto? You can see that there are a variety of structural levels. What stopped Bitcoin from rallying even though it got above its own structural support level? It couldn't hold it because of the main markets. But look at this. It also couldn't hold it because there were sellers right across the entire crypto market who said, "Thou shalt not pass." Okay, this is a little bit tricky. So that means that we've got to literally get above 3.09 trillion to confirm a bullish momentum inside Bitcoin. That's almost like we have to look at charts together. You betcha, that's exactly right. I'll teach you all about this inside the Profiting course, but what you can see is as Bitcoin just got above its own structural resistance and tried to confirm a structural support, total market cap said, we're selling right across the market right now. Down you go, naughty Bitcoin. And of course, we have to consider what the VIX is doing and what junk bonds are doing as well. Row 6 is all about Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. This confirms row 5. And Binance Coin is particularly important because it gives us a bit of an indication. Are the retail investors and traders coming in to centralized exchanges? The answer right at the moment is no. We can see that under the hood, while total crypto market cap and Bitcoin are reasonably positive, we can see underpinning weakness inside the different crypto alts. This is why it's important to stack probabilities. Row 7 is ADA, Solana, Dogecoin, and XRP. What are we seeing just currently at the present time? There's a little bit of weakness inside the crypto market from ADA's stance, and ADA has been rocking and rolling. What about Dogecoin? The memes. The memes are looking fairly positive at the current time, but they're seeing a degree of weakness currently. What about Solana? Solana was looking pretty good until the main market says, Solana, you're following the VIX, you're following the main market futures, and you're coming down. Now, what does it mean right now? Are the main market futures coming down? You bet they are. By knowing the cheat sheet and understanding intercorrelation and interconnection, especially when you combine it with structural levels, you're going to have X-ray vision and a professional outlook, a smart money outlook on the markets. It's very, very powerful. And looking at XRP is moving in alignment with Bitcoin's gravity, but we're seeing a degree of weakness. So there's a degree of weakness under the hood. It's a really good idea to look at the memes. The memes tend to bring in Main Street. Now, that is a good thing, and it can be a bad thing, because typically people get in when it's going green and don't expect it to go red at all. There is an implicit assumption that we all make. When we buy at long at spot or just long under leverage, you expect that you're buying at the bottom and not buying at the top. Or else, why would you get in? You obviously think, and it's normal, we all think that when we buy, we're pretty much buying somewhere where price can appreciate. So when it does things like this, it's pretty freaky stuff. That's why we need to know the structure on all of these charts. It's very, very important, and you can mark them up with level 1 and level 2 standard certification. Let's have a look at DOGE's structural levels. Okay, let's pop on the indicator from the service. Now what we notice here is that DOGE had a 40-cent level of very strong structure. And just remember what happened across here. The entire crypto market was selling into structural overhead resistance in total crypto market cap. This is a vitally important thing to understand. Total crypto market cap and Bitcoin control the fate of your alts. So if you were investing or trading in Doge, you need to look at Bitcoin structural levels and total structural levels, or else you'll be in a lot of trouble. But we also know that the structure inside the VIX is vitally important. If the VIX has negative or positive CTKS gaps, that can really impact what the main markets do. And where the structure is vitally important. Now, what does this mean right now? Underneath the 40-cent mark, we've got a negative CTKS gap all the way back to 36. Now, that could be very, very painful for a lot of people if it does come down like this. To understand if it comes straight down or it comes down in levels or layers, it's important to look at Bitcoin and to look at total as well. And I'll teach you all about that inside the Profiting from CTKS Method structure, which you can get free if you register and meet the conditions. One thing to also bear in mind, it really depends where the structural levels on Bitcoin and total crypto market cap are, because even though you've got a negative CTKS gap, Bitcoin is impacted by its own structure, and so is total crypto market cap, and those two things will flow into your money chart or the chart that you put money into. If you would like to get the trading view indicators from the service, all you need to do is to scroll down here and get the 33 trading view indicators. You'll see that this particular chart is exactly the trading view indicators that you get. And we've looked through a couple here. We've looked through the VIX, the S&P 500, Bitcoin, Total, Doge, just to name a few. But you can look through all of them, and it realistically gives you X-ray vision. And there are now 36 indicators inside the service. If you're in Sydney from the 23rd to the 24th of November, I'll look forward to joining you at the Australian Crypto Convention. I'm expecting it to be a lot of fun. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.